What is up, guys? Today I'm gonna explain market structure session 2. So in the first market structure lesson I explained how to identify valid market structure, and now I'm gonna explain how to use market structure, and I'm gonna explain break-off structures. I'm gonna explain swing failure patterns. What else am I gonna explain? I will just cook on market structure, and then we're done with the market structure part, and then next time we can move on to ranges. Still need to make like 50 videos, but I will just do it raw in live streams. So first I'm gonna explain the market structure part, and after that I will just go on with live trading. Let me share the stream on Twitter. Let me take a sip of my water as well. So I'm not here, I'm not making a course, there were so much questions about how I trade. So I'm just gonna make all the educational execution videos, and market structure is king. So market structure is the first thing we need to explain, and after that we can move on to more advanced stuff. So let me ask the chat, are we live? Is the sound good? Then I can start cooking. Yo, good evening, nice plan. Let me see. Yes, sound is good. All right, so I'm just gonna grab the weekly time frame on the index chart. Damn, beautiful TA. But let me remove this. All right, guys. So last time I told how to identify valid market structures. Market structure, you need 2 consecutive candles up, 2 consecutive down, 2 consecutive up. They also need to trade lower than each other. Inside bar candles do not count. So I'm gonna zoom in a little bit in on the weekly. It's also always important in a bull run, you want to maintain highest time frame valid market structure. So how does market structure work, and how can you use it? So we see, for example, I'm gonna watch this leg. So COVID bottom till first all-time high on Bitcoin. Now we see you have 2 consecutive candles trading lower than each other right here. So this is valid. This is valid weekly market structure. So your weekly market structure low is right here. This is not a valid market structure pool. So let me pull it actually from here. So this is a valid market structure pool. You do not have 2 consecutive down here. You have 2 consecutive up, 2 consecutive down, 2 consecutive up. So this is also a valid market structure pool. So how can you use market structure? So your weekly low goes from this point to this point. Let me fact check that. Yes, no inside bar candle. So how can you use this on the higher time frame? Now, it's important in a bull market. You want to keep your highest time frame valid market structure bullish. So breaking it bearish right here. How do we break market structure bearish? You need on that time frame a candle body close below the low. So what do you see that is happening right here? You have a candle body close below the low. So then you can mark it out as break-off structure. The only thing how a break-off structure is less powerful, that's if you get the bearish close when you break bearish, and then the next candle directly goes up again. Then it's not a strong close. So then you can, for example, give it a 0.5 close, but you're not getting a trade of a weekly break-off structure, but it's only giving you a direction. So right here, this could already give you the first signs of weakness for the bull market to end, or to have like a major pivot point. Now, what did we do? Of course, you also have the Wyckoff going on right here, where this is your initial range high, initial range low, deviation 1, deviation 2. Weekly break of structure, we come up for the LPS, textbook Boyan weekly high right here, we dump down. But this was already the first signs of strength from, yo, we can actually switch market structure to bearish. So what is our new market structure then on the weekly time frame? It's lower low, lower high, lower low. So I'm gonna make this in different color. So that's how you use market structure on the higher time frame. So you can have a break of structure that is a candle body close below the level. But for example, if this would have been, all right, we do it here. So right here you have a valid market structure. You go up again. I'll make this clean. So this is valid market structure, right? And then some people they think that this is a break of structure because you go below the level, but this is a wick. You don't have a weekly candle body close below this level. So you're not searching for a boom, boom for this, for a RIMC and range mitigation continuation play. No, you're actually pulling your range and thinking, yo, we can actually form an accumulation here. But like a lot of people are making mistakes in identifying market structure. They all have different rules, but believe me guys, I've tested everything. This is market structure, don't fade. So this is called a swing failure pattern. If you have a swing failure pattern, you extend your new low as break of structure level. So this is your new weekly market structure low. So getting a candle body close below this level, that would mean a continuation in bearish market structure. Of course, you have like 10 different things you need to align, because we also know that we have a range right here. And we know if you get an aggressive break in a range, so let me do this, range. If you get, for example, a super aggressive bearish, that is just bearish candle right here, that's just a little bit too obvious, is literally that easy, then you need to watch that you can form a PO3, a power of 3 schematic. But mainly using market structure. Market structure is the first basic you need to understand. But you also need to understand there are like 20 different advanced things that you need to know eventually about market structure. But the beginning is just what I just explained and my last video. So if you get an aggressive break outside of a range, you always need to watch for a new Wyckoff schematic in the manipulation phase to confirm the PO3. If you just break structure, go up without taking the low, you're watching for a RIMC play. So range, initiation, mitigation, continuation. But if you start accumulating here, it could be a PO3. Now, so we have the swing failure pattern explained, extending your new market structure low or high. That is just, so the wick is your new market structure level. We have explained if you get a bearish break of structure here, vice versa for bullish, and the second candle immediately goes up, it's still a break of structure, but it's not the strongest break of structure. Now I want to explain how you're actually gonna use market structure. So we always talk about market structure in your third leg. So you have an initial range higher, initial range low. In another video about ranges, I'm gonna explain how you pull your ranges. So you have a Wyckoff going on here. Then you need to identify your market structure in your third leg. Third leg is from this low to this high. If we break that to bearish, you have a valid Wyckoff entry. But we know how I explained it last time, in your third leg or in a market structure leg, you can have 10 different market structure pools. So you can have from here to here is one pool, from here to here is one pool, and you can even dissect it more between this final part. And then return to zone comes in play. When can you use internal market structure tree? That's if you leave like a mini local return to zone behind, because then you could take the trade on the internal tree market structure, and then you're expecting, of course, a sweep of that low, and then you need to react how you are gonna react on the official market structure point. So that's how we use market structure. And one other thing I want to say, if you have valid market structure, so boom, 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 and you swing fill your market structure low, So you get a wick right here. Swing fill. Then you need to watch the highest time frame valid market structure between this high and this low. If we break that market structure to bullish, break structure to bullish, let me make this a different color as well. Then you can say that this market structure level is getting targeted. So swing fill, break of structure in your internal leg, this level becomes targeted. Can you use it? Does this really matter? It can matter if you are doing this in a Wyckoff schematic, but for the rest, you can only use market structure on a higher time frame. You can use market structure to identify ranges, and that's basically it. But market structure is the first thing you need to understand, because if you don't understand market structure, the rest will not work. You need to start with the basics. So this was the explanation, the second explanation video about market structure. And now we go on with live trading. Let me know in the chat if you guys understand this. We have about 15 more videos to go, so it's not getting hot in the kitchen, me explaining market structure, but it's definitely needed. Clear, clear. Wait. Let me check. There's one question. So if there are questions, ask them quick, then I can answer them. Otherwise, we go to live trading. Yo, Wyckoff Insider. At the boss, where you drew the market structure, is it valid structure if the first black bearish candle body is higher than the previous bullish candle? Yeah, so an inside bar candle is this. This is an inside bar candle. Not trading lower than each other is this as well. This is not trading lower than each other. Wait. This is also not trading lower than each other, and that's basically all you need. With this information, you can find the rest yourself. If not, you need to study harder. How to look for a trade when it comes to market structure. That's how I just explained in your third leg. You watch for market structure. So now going back to TA. Beautiful. TP1 hit. Second TP is this initial range high, another 33%, and the rest you leave for Wahala. So did you guys study the post I made about Bitcoin? And also like last live stream, that's where I made a post. Let me actually check what Buddy is doing. I hear some. Yo, what are you eating? Oh. Buddy always eating the most random things ever. So did you guys study this one? Because this is the one, guys. This is how I trade. And don't worry, if you're just starting with trading, first go over the basics. You will never understand what I'll say here. How do you know your direction if a daily we bearish but on a weekly bullish? Higher time frame always overrules lower time frame. Higher time frame overrules mid time frame. Mid time frame plus lower time frame overrules higher time frame. That's it, guys. So this is clear. Nothing to do on Bitcoin. USDT dominance is also clear. We need nothing to do on USDT dominance. Higher time frame USDT dominance is also clear. As I said, we have a new range going on right here, where this is your initial range low, initial range high. This shit would be nice to form a range here. No confirmed Wyckoff, just it would super nice if we create some price action here for them to create like a mid time frame Wyckoff in here. That would be my the thing I want, but hey, we do not always get what we want. We can also spike up to these levels. Then I quickly want to check out Riot platforms. Let me check what the chat is saying. Sounds keeps dropping. I think is my reception where... yeah, is the sound still good, guys? Wyckoff Insider, are there and will there be more educational streams like this one? Yeah, so last week or 2 weeks ago, I dropped first Market Structure lesson. Today I dropped the second Market Structure lesson. But for me, I'm a trader. I'm not an influencer, so I'm not gonna sit down 10 weeks and make a weird guru course. I'm just gonna, there were so much questions about everything, about Bojan. So I decided to make the educational streams, but I just go live when I have time, and I'm gonna explain it just raw. Like I don't need a video to like 20 times to explain something. I just go live, I explain it raw, but I'm only gonna do it when I have time, because making these educational videos is not gonna make me any money. I'm literally just doing it for you guys. But I have to say, like, if I make a video or if I make a live stream about educational content, I see that you guys are improving. So that's my benefit from this. And also for me, explaining what I do is also sharpening my skills, because you can do what you do, but if you can explain what you do, you get even better. That's why it is also every guy in history that has achieved something, they always take an apprentice, like someone that is gonna learn from him, right? That he's gonna teach everything. It was the same in Star Wars. It was the same with Star Wars. Like Jedi always had like a mentee, right? So having a mentee or having mentees is always super good. But it's important that if you have mentees, that they are hungry. Like, you're not gonna choose a mentee that's not hungry. And that's why I have created the circle as well, that are like right now 31 killers. And that's my life purpose. Because if I need to vanish, or if X is getting too noisy, or if this is getting too noisy, I'm just gonna chill with the circle. And for the people that are in the circle, I think there are like 10 or 15 guys watching right now that are in the circle. It's amazing, right? No, you can never call yourself a master. I've done the calculations. I need 4,500 more hours to be a master. Like being a master, it's different. You rarely make mistakes, or you make of course in trading you make calculated mistakes. You see everything. You make basically, like, I'm not making really mistakes but that's more because I'm very autistic with making mistakes. Like when I make a mistake, I'm gonna find out why I did that mistake, and it will never happen again. I'm not the guy that makes the same mistake another time. Like, you have the rule, right? You can make the 3 mistakes the same time, and you can make 2 mistakes the same time, and the third time you are an animal or something. But I make a mistake one time and then never again. So Riot platform, super interesting chart. We are pushing up super high. So let me quickly do some mid time frame analysis. We are actually forming a nice bow. Oh, we took this liquidity. Not even, we took this liquidity. We took strong liquidity. So you already took liquidity here, so there's no reason to get this liquidity. We took liquidity of actually liquidity level. We don't have a valid Wyckoff here. It is an accumulation range, don't get me wrong, but it is not a valid Wyckoff. So could this already be like a pivot point where you make like a crazy drop to go higher or to go lower? Yes. So do we need to be careful on Bitcoin? Yes. Are we at the final part of the 4-year cycle? Yes. So is this logical? Yes. So this is clear as well. So Bitcoin, we cannot do anything on Bitcoin. USDT dominance levels are mapped out. Riot platforms, I just explained. Higher time frame Bitcoin is clear. Now I want to take a quick look at Ethereum. Guys, I'm super interested in something like this. Even this. If we do something like this, I will be heavy long with the first signs of strength. Then I will be long here. Why? Because you already took liquidity here. So yes, we have a range going on right here, but there's not the best reason ever to go again for this range low. Could be, then we just play the range, right? So you need your lower time frame Wyckoff in here. But this is also something I'm watching for ETH, and then I'm watching for a low time frame Wyckoff in here, or some sort of a 15-minute bullion low into the daily bullion low. So let me know if Ethereum price action is clear as well. Thanks for your time. Haven't seen anyone with such an intention in training till now. Thank you very much for your compliment. That's why we are, that's for what we are doing it for. Not for the compliments. I don't need compliments, but actually see people improving. That's like purpose, right? If you're already chilling yourself, then yeah, what I want is other people chilling as well. Clear. So Ethereum is also clear. Then I want to take a look at Auster. Damn. This shit is not trolling. There was an amazing short on Auster. It was right here. Would be in a 5% risk setup. Now we're going higher. Let me actually delete everything. Not everything. So look at this daily low, strong. You have new valid market, not on the 18 hour. Damn, guys. So guys, better than this it won't get. Boom. 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 Not taking this liquidity, not taking this liquidity. Doing this, boom. Textbook bullion low. It will not get any better. Also look at this closes, right? And then you say to me that markets are not manipulated. As Money Tower always says, the wick is just to stop over leverage people out, and the closes are the shit that actually matters. And you see in the bullion low or bullion high, if it's a good one, closes are exactly at the same level, close and open. Nice to see. Well, I wanted to do some negative fibs. So I'm now going to search for the first valid market structure between this low and this high to get some negative fibs going. This is your market structure. So guys, boom, 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 boom. So you can pull a negative fib right here. That we already hit. And you can pull one right, not on this time frame, but you can pull it here. For now, I will just put the negative 0.5 on my chart. We did not hit it. Like, let me see if there is something why. So I'm now gonna watch this market structure, and this market structure is not valid on this time frame. Boom, boom. We did not take it out here. This is valid market structure. So you can pull a negative fib here. Then I'm gonna watch market structure between this low, valid as well. Let me see what that -1 is saying. It's already hit. Let me see if we have some higher time frame structure. No, 45. The final pull we can do is this one. Yeah, so really strong level right here. Just we'll put 1 here. You can say this was a whole range. You can also say this is a range. You also see all the exchange. Wait 1 second, guys. Let me take a sip of my water. This was a range. This was a range as well. And how I just explained in the beginning of the stream, how if you get an aggressive break outside of the range, you can watch for a manipulation phase. So this is a potential manipulation phase. For a PO3 schematic, we have the return to zone. We have the aggressive break outside of the range. So then I'm gonna watch for a bullion high formation. 4 hour is making some sort of a bullion high. I do not like it that much yet. 3 hour I like more, but 2 hour I like a lot. Then I'm gonna see if there was a trade. Initial range high, initial range low. It's a pretty big deviation. Let me see if we hit. Wait. All right, that is nice. This no Wyckoff guy. This is a yet again a PO3 schematic. So aggressive break outside of the range. So you're watching for your PO3 schematic. Let me actually go on a 1 minute. D to S. So guys, this is your market structure, right? This demand zone should have made a higher high, but what did we do instead? We closed bearish and we created supply right here. And then you see this wick. So this is where you could have opened a short position. This is just a 1% risk trade, nothing else, a 1% risk trade. That's only based on PO3 schematic, extreme premium. All right. Not only on D2S, it's based on potential PO3 schematic. Because of you have the range, you have the aggressive break outside of the range. You have a lot of +1 confluences because of all the exchange listings. I was on X for some time today. I saw like Auster is now trading live on this, on that, on that. So that were a lot of confluences. You're in extreme premium pricing. You hit your negative 0.5 of your main market structure in this range. You have a D2S flip where, yeah, market makers are clearly going over into a sell program. The safer entry would have been to wait for market structure to break. So you don't have 1 minute market structure here. You have 1 minute market structure right here. So there's where we broke it to bullish. So what you could, for example, have done, let me make this more clean. What you could, for example, have done, scaled in, you can put it here. Wait. Scaled in 0.5% here, 0.5% here. So your average entry gets around here. This is the technical target of this trade, but you know that we can also potentially be in a bigger PO3 where, yeah, this is your technical target. Not your technical target, but the level where I would like to take profit. Of course, you also know that we are also in a bigger PO3 where this is your technical target, but where I would target right here a lot. No, this unfinished candle. Yo, what are you doing, buddy? What can we watch right now? We still have a nicer negative 0.5 of higher time frame market structure. So we can pull in, if we come up to the 0.5. This range is not confirmed, guys, but if we come up to the 0.5, we can pull a new range from this high to this low. And if you then start distributing in here, you can take a short. If we go higher, we go higher. You see that they like to use the PO3 schematics on Auster. So that's definitely something I will be looking for. But this trade would already, like 50% TP would already have been taken on this, on a 3RR. So 1.5 RR would have been realized. Are there any questions on Auster? But no confluences on majors. Now, I just explained how you got all the confluences with the news, so we can actually take a look at Twitter ourselves. Auster chain is coming. Auster now live trading available. Just a reminder, my airdrop of Auster is sold, I don't know. But there was some more crazy news about Auster. But now they also go for troll, you know? They also go crazy on troll. But that's basically it, guys. I think it's clear. And that are the main charts I'm watching right now. So Bitcoin, ETH, Auster, and yeah, that's basically it. And I also shared a lot of tickers, so I just want to say it right now. Check this one. By the way, guys, don't fade this. Don't fade this. Guys, don't fade this one. Don't fade this one as well. Like only 53 likes, only 8 saves. Yeah, this is where the magic is, guys. Don't fade this one as well. So all I'm gonna say, guys, thanks for watching in this stream. I don't know when I see you guys again. I think tomorrow. Don't take any trades I wouldn't take. And yeah, I think you guys have a lot to study, especially on the Bitcoin trade I took today. Study that one. See you guys later. Adios.